Hi, hello everybody. Welcome. It's a pleasure to be here with you today. And I want to thank you all for being here. And FX Street, hi, how are you? For giving us this space. Good, great, the sound is okay. I, I hope it goes like this. It keeps like this, sorry. So, as we have a lot of time today, we are going to talk about a bit about my favorite technical indicators and maybe some advices. Nobody is a genius to give somebody else advices, but oh, thank you, Ahmed. Thank you, really, thank you all. Well, I was saying, nobody is a genius to give everybody, anyone else, advices about how to trade or what to do, but there's a general idea of working, of planning work with trading that at least works with me. So I would like to share it with you today, okay? Usually when we start trading Forex and see a price chart, we have the wrong idea that as many indicators the better, because as we thought each one measures something different, we assume we need them all to have a great trading system. But as many of you may know, practice helps us to change that idea. And slowly we learned that the hard part of this profession is turning the complex into simple, okay? What would really help us to trade is thinking, the right way. And as I always say, the right way to do is to use not more than two indicators for a trading system. No matter if it's a trading, intraday trading, swing trading, medium trading, long-term, scalping, whatever you like to call it, I recommend you always not to use more than two indicators, maybe three, but that's enough for any simple and practical trading system. What makes things simpler is to have a visual method, okay? I will add a chart just because I know the webinar is getting recorded. Okay, but as you can see, this is an euro-dollar daily chart, okay? And you can see I have two indicators plus three different moving average. The idea is that I use them in different time frames, okay? Although I have just one chart, I ignore one of these indicators in one time frame or ignore the other in other time frame. Okay, the idea is to keep the system as simple as possible. You need to have a map of the territory, okay? This means that determine the key factors for the day, for example, fundamentals needs to be released, and determine trading zones, that is the key supports and resistance of the day, okay? So we must take a daily chart and try to find out where are the daily maximums and minimums inside the usual trading range for this pair, for example, that moves average 100, 150 pips a day nowadays. And with this information, we can determine our trading zones in between. Helped by indicators we are going to see right now, we will have a good trading system or a good trading chances, okay? I always say the same. We are working here about with probability, okay? What has more probabilities of happening? See the point? No one of us is able to forecast markets 100% certain, okay? We just use indicators to support a probable scenario, and we have to work with that probable scenario and turn to trade following that idea, okay? So once we have the map, we determine resistance and support, we must choose or select a couple of indicators to support this trading idea we are having, okay? In this case, one of the indicators will be the one that gives us the signal, and the other one could be used as a filter, okay? Because I always say the same, if we plot on the chart more than 4 or 5 indicators, we are going to have the issue that probably one of them will not be supporting the rest of them. So You must use one indicator as signal and the other as a filter of that signal. When we have that plotted, then we are ready to trade. Is everything fine till now? Do you have any questions? Sorry, I will close all windows. Everything's fine? Okay, we are going to close all windows in my computer. So, okay. Okay, thank you all. Yes, Dean, it's being recorded. So, you will have a copy of this once I finish, okay? So, I will say it's the same. Regarding each currency, we have to choose a different indicator. I will start with euro because we have plenty of time today, and we we can see all my favorite indicators for all the different currencies. As you can see, I have plotted momentum and relative strength index. Both indicators work in different ways, measure different things, and work for me just fine. As you may know, momentum is an oscillator that measures the amount of a currency price has changed over a given time frame, okay? Momentum is significant because we can use it to measure the speed in price changes and take advantage of that, okay? I don't trade daily charts, but I guess this is clear now because as you may see, as you know, euro dollar kind of messy lately, not having a certain chain and maybe not giving great momentum signals. And the idea today is to show you the clear signals that we can see, okay? And of course we can see the ones that are not clear to balance the difference, notice the difference, and learn how to use the indicator. We usually say that a healthy price tends to exhibit a strong momentum, while weakening trends often have decreasing momentum, indicating a possible trend reversal or correction. A bullish signal is generated when momentum is rises above the 100 line, like in this case, around here, okay? And a bearish signal is generated when the momentum cuts the 100 medium line to the downside, okay? Like in this case, okay? The momentum indicator can also be used as a leading indicator. This means that we assume that market tops are typically identified by a rapid price increase when everybody expects price to go higher, and that market bottoms typically end with rapid price declines when everybody wants to get out. As a market peaks, the momentum indicator will climb sharply and then fall off, diverging from the continuous upward or sideways movement of the price, okay? Like in this case, we can see it clear, okay? And here we see the indicator climbing sharply, okay? The indicator is very vertical, okay? And then falling off and start diverging, okay? The indicator begins to fall, maybe even before price starts to, but it's telling us that there's a chance, of a trend change, okay? Momentum also lets us study the speed of the movement related to the number of previous sessions, and in many cases, although price continues its trend, momentum gives us signs of exhaustion of that trend and start to turn in the opposite directions in advance of price movements, what we call a divergence indicator, okay? Many indicators used to have divergences. They are maybe not easy to identify, maybe not easy to read, but they are useful, okay? Graphically, you can see that we can also draw lines in the indicator, okay? If I will make charts a bit smaller, okay? And if we take a look at past history of the charts, okay, and try to find maximum peaks momentum indicator made, okay, the zones around the indicator made maximums, maybe like here, okay. We have many approaches to that 103, 104 zone. You can see it. We can draw a resistance in the indicator as well as supports, of course. let me adjust the line. Okay, that will help us to determine probable turn points. Okay, now with this resistance and support zone we can draw, okay, we can find probable turning points. Okay, of course we don't need just to draw one, we can draw more than one, but the idea is to find places where price rebounds and give us probable turning points. We can also draw an indicator. Give me a second till I enlarge a bit the chart. Trend lines, okay, not just resistance or support. One thing is important to notice here is that this kind of supports of resistance will vary with different time frames. Okay, so if I turn to this 4-hour chart, my resistance levels won't be the same that in the one I was telling you in the daily. Okay, we can also, I was saying, we can also draw trend lines in indicators. Okay, that will also give us the same, that will work as fine as trend lines in the chart. If momentum turns and cuts the 100 line to the upside, okay, we will have a first bullish signal. Better if after cutting the 100 line, the indicator cuts this descendant trend line. Okay, that will confirm the momentum of the pair, the speed, the upside in the pair, and give us more certainty about our trade. About a filter, when we use momentum, Alexander Elder, a very known and famous trader that wrote many books, presents a system that uses a 20 moving average, simple one, to filter the momentum indicator. Okay, and I find it very good system for long-term charts, from 4 hours and bigger ones, not smaller ones. It's a system that just waits for a candle opening under or above the 20 moving average when we have the cut. In this case, in 4-hour charts, we have the bearish cut given the first signal, and the confirmation, the filter, will be next candle opening just under the 20 moving average. That gives us the entry point. Okay, can you see it? And maybe it's a bit small. Okay, around here we have the cut, and we have next candle opening under it. Okay, and there we have our trading signal. That is all we need, a signal and a filter. Okay, bullish case, the same here, maybe two large charts. You see the cut is not so good, but you have a cut here, maybe too short here. We have a cut to the upside here, and a candle opening above. How to set stop loss in this system? Well, our stop loss must be set above or under in the opposite way of the moving average. Okay, so if we enter a bearish position in this signal we have here, our stop loss should be placed above the 20 moving average, because in any system we chose to trade, we must realize that when one of the conditions that get us into the market is lost, then the trade is lost too. So we should close the trade. Meaning, if momentum turns to the upside in this case, or a candle opens above the 20 moving average, the system or the signals fail and we must close the position. Okay? So if everything's fine, we will move to another indicator and continue with this webinar. Okay? Okay, so back to the euro-dollar chart. The other indicator I like to use with not only with euro, but with another currencies we will look at in a few minutes, is the relative strength index. This indicator also measures strength, but it's always measuring the strength of offer and demand, not the strength of the price action. Okay, it is expressed as a percentage, meaning it's an oscillator that moves between a certain range of 0 and 100, being 50 the neutral zone. Okay, this indicator is the sum of all bullish sessions divided the sum of all bearish sessions. The sessions numbers is variable, and generally we use the typical 14 periods that we have for default, but of course you can change it and test different settings for any indicator. Okay, so in this case, as we are in the 4 hours chart, we are zooming on all the last 14 candles. Okay, if we turn to dailies, we are zooming the last 14 days. See the point? See the difference? This indicator represents a certain value for each session. So you can see it following this chart, and it's a classic chart, and you will find that I have two levels, the 671 and the 31 level, and not the 50. I don't notice the medium level. Okay. Now we say that when the indicator, the oscillator, sorry, is above the 70 or around the 30 level, is overbought or oversold, meaning there are chances price is getting, or price movement is getting exhausted, and a probable reversion is underway. Probable, not likely. Okay, it's probable. We need a filter to confirm that reversal. Okay, in between, in the middle, we say the indicator is neutral. Okay. So when we say that the indicator is way beyond above the 90 zone, we say it's oversold, and then we are having a selling signal. Okay, if you take a look at this chart, you will find out that not only momentum begins to reversal, but also RSI was around 84, meaning way over both. Both indicators were telling us the reversal was about to happen. When and where that will happen, well, we don't know. Maybe reversal signals in relative strength index begin here. See? Yet momentum continues rising, telling us maybe that this reversal will take a bit more to come. Okay? So, in this point, when momentum, can you see there, begins to turn to the downside, then was the time to enter in the market. And you can see that when momentum begins to turn, in relative strength index also begins to turn to the downside. Okay? Of course, if we enter a trade around here when the indicators begins to turn, I suggest to place stop losses just above previous maximum zone. Okay? The size around 37.45, we have a huge fib or resistance zone. So we can support our status with Fibonacci, so supports and resistance determinate in other ways. But I tend to place supports and resistance above or under and determinate. I tend to place my stop losses under or above a resistance or support zone. Okay. So we were saying that RSI show us higher buying or selling probabilities, but as important as that is taking notice that a trend change in the indicator. Okay, meaning when you can clearly see peaks up or down, that can show us the end of a trend, and so these peaks are marking a probable maximums or minimums in price actions. Okay, and these kind of indicators always gave better signals when they made peaks, like in this case we can see here. Okay, let me find it again. Although we don't see peaks all the time, those are the best signals we can find in indicators. Okay, when we have like a B, in this case here, okay, or in this case we have a small peak around here, another one here. Okay, another one here, and here we have it quite rounded. When it turns rounded, it's not as accurate a signal as when we have a peak. See the difference between them? Okay, more or less that's the idea of these two indicators. If you have any questions about this, now is the time, because we are going to turn to something else. Okay, I have some questions and I was looking at them. So, okay, we will answer those questions. and continue with another indicator. Greg asked about the moving averages, okay? I will explain them all, okay? We have 3 different moving averages here. The red one is a 20 periods simple moving average, okay? That is used to filter just momentum indicator. That's the only use I give to that moving average, at least for this pair, okay? Then we have this violet one, and it's an exponential 200 periods moving average, okay? Exponential, not simple, okay? And this light gray you see here is a 60 periods, also exponential moving average, okay? I tend to watch the 60 and the 200 exponential moving averages, mostly for euro in 4 hours and in 1 hour charts, okay? They act as dynamic supports and resistance, and although they don't give a signal or a trigger to enter the market, when they cross each other, they point for a trend change or a trend acceleration. Like in this case, you can see here a clear cut of the 60 to above the 201 and an upside value trigger after it. Okay, it's just a guide. Okay, as long as moving average remain this one, the 60 and the 200 remain separate, trend is strong. Now they are getting together. You see that market is moving sideways and prices tend lower. The idea is that 200 should turn a bit to the downside and the 60 should cut the 200, giving us a probable bearish continuation, not signal, not trigger, but maybe clue. Okay, that's the word, clue. Of course, that could not happen at all, and they could begin to separate again, and price could continue rising. We'll see. Okay, nothing serious there. Nothing we can read. Okay, Ahmed asked about filtering RSI, and I forget about that. I will explain it right now. Give me a second. Yes, exactly, Rectav. The price touches the moving average and bounce back. Okay, we will talk about both things, about relative strength index and the bounce, okay? The fact is that to filter the relative strength index, or I use both the momentum indicator to see where it is, or what I like to do is trade with relative strength index in very short-term charts, like 15 minutes. I don't know if we can see it right now, but well, let's try to. Okay, we don't have a real oversold signal around here. Okay, not the case right now. The pair barely touched 30, but when the price reaches a minimum, an important intraday minimum or maximum, I tend to look at the 15-minute charts and turn also to 5-minute charts and see that the indicator is also under 30, and to the 30 minutes one and see if it's also under the 30 line. Once the 3 charts reach the oversold or overbought state, in this case it's not clear in the 30 minutes, I attempt a trade against dominant trend. Okay, that's the way I use to filter relative index. I take a look in at least 2 or 3 different charts to see where price could go. Okay, if I see that pair is oversold in 5 minutes, 15 minutes, and 13 minutes, and made an important minimum, like in this case, I tend to trade against the trend. Sorry, it's like my tongue is all together. Can you see how the filter is applied? You take a look at multiple time frames to see. That's a very short-term trade, of course. But if you move to bigger time frames, like 4-hour charts, I tend to filter it both with the momentum indicator, see if it's supporting or not a correction. If you take a look here, you will see that momentum turned to the upside a bit before a bit before, yes, not after, a bit before than relative strength in those. In bigger time frames, the better way to trade it is to wait for the indicator to cut back inside the 30 line. Okay, in this case, like in this case, we have an indicator well overbought and not given stagnant. Maybe when the indicator cuts back in this candle, that's the way to enter the market. Wait to indicator re-enter the 13th zone to enter the trade. And in this case, the same. Wait the line to be cut to the upside, okay, around here in 30, to enter a bullish trade. Okay, that's one question. Oh, okay. Often the price touches rectal. Yes, that's rectal. We will talk about the 20 as moving average. Give me a second. We are going to turn to our friend GBP dollar. I guess you are seeing the charts. Let's try, and I will come back with another questions. Okay. I have the same indicators here. Momentum, the 200 exponential moving average, exponential, and the 20 simple one that is a little thin. We are going to make it a bit darker so you can see it clearly. Okay, there we are. And yes, I always said this moving average, in particular with this pair, acts as a dynamic support or resistance zone. And yes, of course, there is a way to trade it. I don't remember who asked it. Rectap, okay, Rectap asked about this. Okay, although I don't particularly like very much this pair because it usually tends to pass a small number of pips above or under supports and resistance zones and then come back. The way to use it is as a dynamic supports or resistance zones, or at least the one I use, is take a look at 15-minute charts. Okay, in these charts, beginning with 15 minutes and moving on, we have to notice, first of all, the inclination of the moving average. Okay, if the moving average is flat meaning like here, okay, that is flat. It's not have a certain direction. Okay, in this case, I ignore the moving average. Okay, I don't trade it. Okay, yes, when the moving average is with a good pendant or good inclination, like in this case, the idea is to trade the rebounds when it's tested in small time frames. Okay, in fact, in this last case, it wasn't able to reach, of course, and the breaks above it. The idea is to filter the 15-minute charts with the 30 minutes one. If we take a look at this is not easy to explain when it's not really happening, okay? But maybe here, take a look. 15-minute charts has been broken, okay? So if broken and candle open above, where is my next target? In the 30 minutes one, okay? There's a clear example. 50-minute charts give me a bullish entry with momentum cutting the 100 line, a candle opening above the moving average, and despite the bearish inclination, the signal moves and to where? To the 30 minutes one. The pair reached the 30 minute one, can you see it? And rebounded to the downside. See? In here, when the pair reached the maximum of this movement, reached the 20 simple moving average in 30 minutes charts. There is my out of the market. There I should close my position, and if I'm brave enough, I could enter to the other side and hope the pair will fall. That it usually does. First time I found a real example of the systems in live webinars. Okay, it's great. GBP works with this moving average system. See that the pair reached the 30 minutes one and rebounded. It's clear. It's understood. Okay, I hope so. Yes, that's the idea. It bounced in the 20 moving average. More Bollinger Bands are also a great indicator for GBP. If you plot Bollinger Band in daily charts and this pair GBP dollar and then to use it, you will have a very, very simple system to trade and very, very reliable. Okay, so there was one more question. T was asking, what does momentum downtrend signify? Okay, the red line. I will draw here. I was telling you that indicators, we can also draw trend lines in indicators, okay? And trend lines will act as dynamic supports of the system as well as they act in the chart, okay? So if momentum turns to the upside from here and cuts the 100 line, it's given me a first a good bullish signal. So my target there would and will probably my target will be where the price action reaches this line. Yes, have a confirmation of a bullish continuation, and we will continue. Okay, something. Okay, we have some issues. Well, sorry, I was saying that a cut above the 100 line and above the descendant trend line ever here is giving us more confirmation of a bullish continuation. However, euro has a small descendant channel also around here. Okay, I was looking at it earlier this morning. Okay, can you see it? Maybe in 1 hour charts better to be adjusted and see it clearer. Okay, there we are. So I must combine my analysis. Okay, I don't expect the pair to rise much farther than this, or if so, wait for a confirmation about this descendant trend line to confirm further bullish movements around here. Okay, yes. Despite this spike, I still see the pair a bit bearish, but it's just me. Okay. So if everything's fine and no more questions about this, we are going to move to other indicator. Okay. Okay. I will turn down the camera a bit to plot the indicators. Here we are. We are going to talk a bit about ADX, another one of my favorite indicators. This one is a bit light. I will darken it a bit. We'll change the colors so you can see it better and plot it for 14 periods. I don't know why this is that so light. You must change it a bit. Let's see if it's no. Okay, here we are. Okay, this is a good indicator also, and it has its filters itself. I like this indicator, and also a quite unusual indicator like Ichimoku that if we have time we will discuss later on. And I like both indicators because they have their own filters. Okay, they are kind of double indicators at the same time. They are measuring, or they are filtering the signal by themselves. That's why this indicator has 3 lines. Okay. Okay, this indicator is the maximum distance the price moves since the close of previous session. That is what it's telling us. Okay, it measures the amplitude. Okay, the distance between those maximums and minimums of a certain number of sessions. In this case, 14. That could be a dailies, hours, or even 5 minutes. As you know, average. This average to range is okay. Back to ADX. Okay. Oh, this is a Japanese yen chart. Sorry, I was thinking of plotting in a GBP chart. Anyway, the idea is that the green line is the indicator. Okay. Wales Wilder, the developer of this indicator, decided to make this indicator to know the strength of actual trend. Okay. But for us, it's very important to determine if market is actually in trend or moving sideways, because certain indicators work better for each situation. That's something I always say. To use this indicator to forecast, we have to first understand the basic principle. As higher is this green line, this indicator value, the higher is the chance of a trend change. Okay, And on the other hand, as lower is the indicator, more weak is actual trend, okay? Meaning, when the indicator is moving to the upside, it's not telling me we have a bullish trend. It's telling me this bullish trend has enough strength. When the indicator is moving to the downside, the green line always talking about, it's not telling me the trend is moving to the downside, but it's telling me that previous trend is losing strength, okay? This green line only measures the strength of the trend, okay? It's not telling me it's up or down, no way. It's telling me how strong it is, okay? So when we reach maximums, like in this case that we have a very important maximum if we compare it to previous peaks, we have the indication that the trend could be getting exhausted, okay? And of course it begins to exhaust, okay? But these peaks can also happen in a bearish trend, okay? Let's see if we find an example, okay? Like here we are, okay? We have a very important bearish trend. An indicator continues moving to the upside, showing us strength is good. Once it's reached a maximum peak, the indicator begins to fall, okay, telling me that the strength is being lost, okay, and marking me a probable trend change that it actually happens, okay. But see the difference or the idea that the indicator doesn't tell me it's bullish or bearish, just telling me the strength, okay. In this case, we have the same peak in the maximum of a bullish trend, okay, and the same peak in the minimum of a bearish trend. See the difference? Okay, once we know that this indicator shows us the strength of the trend, we add these other two secondary lines for the indicator that are the ones that give me the entry into the market or not signal, okay. I mostly use this as a secondary indicator to tell me whether we are in the trend, okay? Yet it works fine by itself. This indicator combines two different kind of moving average. We can call them moving average, and they are average of previous past movements. You have seen a plus DI, okay, a blue one, okay, and this is the sum of an average of all the upside movements, okay, and the less DI, okay, the red one, okay, is the sum of the average of all the downside movements, okay, one of the outside movements, one of the downside movements, okay, just moving average, and of course the one that smooths the moving average signals, the green one. As we say, these combinations give us a certain indication of how strong is the actual trend. Usually, we say that readings above 40 level, okay, above 40, indicates a strong trend, while under 20, a weaker one, okay? So, in order to trade with ADX, we have to see the green line, the ADX itself, above the 40 line. With all we say till now, we can say that to catch a trend from the beginning, some traders would like to get into a trade following trends once the indicator is above 20, and when the ADX is coming upside down, crossing 40, we are seeing the trend weakening. I prefer to see the green line above at least 25, and that indicates we have a better trend developing, okay? So, 40 is about 40 is a strong trend, under 20 is a weak trend. We need to see the green indicator above the 25 level, okay, to consider actual trend more or less strong, okay. In this chart, okay, one more thing, how to read crosses or how to read signals indicators. Well, in this case, we need to remember that signals are read from downside to upside, okay? We look for crosses between the red and the blue line, but always from downside to upside. In this case, in this last case here, we are having a signal with the red one crossing the blue one. That's the way we read it. We don't read to the downside blue cutting red, okay? We have the minus DI, see, cutting the plus DA, okay? So we have a selling signal, okay? When the minus DI cuts the plus DI and the ADX is above 25, we have a selling signal. On the opposite, okay, like in this case, when the plus DI is cutting the less DI, okay, to the upside, okay, we have a bullish or a buying signal, okay? Can you see it? And of course, the indicator is well above 25, telling us the trade has good chances to continue in the way we choose. So we have just seen the different triggers, okay? The D line crosses will combine with the ADX line above 25. We call this a close indicator, meaning it usually fluctuates between 0 and 100, okay? For my own experience, I can tell you that readings above 60, okay, are not likely in 4 hours or in one day in daily charts, okay? So in this case, that we have a reading around 33, there's an indicator was telling us a probable reversal was underway. If you see how the pair behaved in extreme cases, giving us further clues to trade this pair, okay? So if you see a reading in bigger charts above 60, there's a high chance the actual trend would get exhausted, and it happens actually with Japanese yen and around here. Always remember, under 25, when the line is under 25, okay, under the 25 level, like in this case, okay, we have one signal here, okay, a buying signal, okay, it's a no trade, okay. Despite we have the buying signal with the green line under 25, I don't consider that signal really reliable, okay. So it's a no trade for me, or for you should be, okay. Another pretty good signal came from a cross, okay, when the DA, the active DA line, not only crosses, like in this case, okay, not only crosses the other one, but also crosses the green line, okay. In that case, we have a confirmation that our trade is doing fine. Maybe this is not the best example because the green line is under 25, but you can see the point here, I guess. Let's see if we have a better example in the chart. Okay, we have a signal, price cutting, and like in this case, okay, we have a signal with price cutting the DI cutting the other one, and then the red line moving above this one, okay, above the green. There is confirmation of previous signal, okay. Always remember above 25. Finally, as in all trading systems, when one of the conditions that gets out into the market is lost, then that is your out of the market signal moment. Closing the trade with a small loss is better than staying inside and waiting for a miracle to happen, okay? Back to my friend, not my friend, of course, not, I hope he was my friend. He is Alexander Elder. In his last book, Trading for a Living, suggests going with the trend whenever ADX breaks from a low level and from beneath both directional lines, and then ratchets up 4 points. This is a sign that a new trend is starting. He also warns that the ADX is should be above both the lines, and the trade is ahead, okay, of itself. He suggests getting out of the trade when ADX turns lower from such position, okay? But of course, that's another expert opinion that I want to share with you today, okay? So, is there any questions about this indicator? If we don't, we can move to another one, okay? It's everything fine? You're listening very carefully to what I'm saying. No questions? Okay. I will turn my charts down a bit and plot another indicator, another template for you, okay? Oh, sorry, Ahmed, what did you say there? I can want to repeat how to exit with ADX. When as always, I told you, you must exit a trade negative, of course, stop losses, when you lost the conditions that get you into the market. And as I was told you to to plot or to choose a limit for your trade, the general or the basic idea is to yes, I turned the screen down because I was looking for going to plot another indicator. Sorry, guys, sorry. Give me a second, okay? The idea is that to your profit, sorry, I get lost. To take profits in the trade, well, taking profit will depend on the time frame you are trading, okay? If you're trading in a small time frame, I know radius, no speed, I know. If you're trading in smaller time frames, you can, no, you can, if you're trading in small time frames, you can ask a pair to move 150 pips for you, okay? If you're trading 15 minutes, you need to set your limit order to, I don't know, maybe 10, 20 pips. If you're trading forward charts, then you can extend your limit orders to 60, 80 pips, okay? But the idea of a limit order will depend if you are trading in front of the screen or not. If you're trading in front of the screen, you can stay there and watch and follow price action and see if you get further confirmation of the trade you are inside, and you can extend your limit orders, okay? Yet, if you program your trading and, I don't know, go away from the computer, I suggest you to be conservative and set your limit orders in about, I don't know, 50, 60, 80 pips the most when you're trading 4-hour charts, okay? To get certain your trade will close positive, okay? You don't want to lose a trade for a couple of pips that the pair didn't reach, okay, in the last minute. See the difference? So the limit orders will always depend on the time frame you're trading and the time frame you read the signal, okay? If you read the signal in a 50-minute chart, it's not the same as if you read the signal in a 1-hour time frame, in an hour, 1-hour chart, okay? Well, okay, video is cool. We'll still have, yes, we still have at least 40 more minutes to hear me, okay? You won't get rid of me that easy, okay? Yes, video is good. I just turned out the charts to plot another indicator. It was just that deep, okay? But I will do it together with you, so you don't complain you don't have video, okay? I'm deleting. Okay. Okay, back to forward charts in euro, okay? We are going to talk a bit about stochastic oscillator, if you're okay, and you have no more questions about that, okay? Okay, I will try to make it, okay. Here we are. Can you see the euro dollar for our charts with stochastic oscillator? Is the chart fine? And the stochastic oscillator also? Okay, so we will start talking a bit about this oscillator. This indicator was introduced by George Lane, okay? It's based on the idea that when a pair is in a bullish trend, the price usually tends to close in session maximums, okay? And when the trend is bearish, price tends to close in session minimums. With this concept, the author tried to find a mathematical relationship between the close price and the maximum and minimum for each session. As you may know, all indicators are just mathematical relationships, okay? We are seeing lines that at the end of the day are not more than mathematical formulas. Okay, this is stochastic oscillator is formed by two lines, one key and one D, and the key one tries to find a relationship between these maximums and minimums of the closing price, while the D one calculates the simple moving average of the other one across a certain number of periods. This indicator, as well as relative index, show us when a pair is oversold or overbought. Okay, lines move in between a range marked of 10 and 100. Meaning is a close indicator, and so when market is in a defined trend, usually it saturates in the extremes of the band. Like in this case, you are seeing around here. See, this is an indicator I prefer to use when market is moving sideways. Okay, and we can use it even in 15 minutes time frame, 30 minutes time frame. Okay, but as you can see, this is in no way a good indicator when market is moving in a trend. Okay, because trend continues rising, that indicator can and saturates in the upper extreme, like in this case, saturates in the upper extreme, giving us no good signals to enter the market or fail one. Okay, so remember, I prefer to use it in sideways markets, not when market is in a good, strong trend. Okay, so because when it saturates in those streams, that does not mean the price is ready to turn. Okay, we are in trend, so no readings from a stochastic oscillator. But when market is moving sideways, we can say that the pair is overbought above 80 and oversold under 30. Okay, under 20. Sorry. Okay, this indicator gives us three different buying or selling signals. We have a buying signal when any of both lines, okay, when any of both lines catch the 20 level downside up, and a selling signal when they catch in the opposite way. Okay, when the lines catch the 80 line down upside down. Okay, the other way, no, downside up. Okay, sorry. We consider that using these levels, 20 and 85, could work turn to 50, 25 and 75, maybe a bit better, a bit more smaller range in the middle. But anyway, to add a trend indicator to this oscillator works better when will help us to determine if trend is strong or not, and will tell us if the signals are accurate or not. Meaning, instead of 80 and 20 that are the classic settings of these indicators, see, I rather use 25 and 75 as a first filter for this indicator. Okay, I need a smaller range in the middle, and usually when price cuts them, it's more accurate than when it cuts 80. Okay, because it's getting far from this saturation situation we saw earlier. Okay, so to filter this indicator, we can also add a trend indicator like momentum to tell us if the trend is strong enough or not to continue. So the signal would be more accurate. Sorry, I'm a bit messy. Okay, we have a buying or selling signal when any lines catch one of those levels. Okay, bearish signals comes when the green line, key line, cuts the other one. Okay, under or above the levels. Okay, and then both together catch the base of our oversold zone. Like in this case, we have a bullish signal, meaning the signal is stronger when both lines cross up together. That in this case, that we have kind of a bearish signal, works anyway. Yeah, because market is moving sideways. Yes, it's better to see both lines under or above these levels to consider signals stronger. Okay. We also have signals when the D line, the red line, diverge from the price action. Not something happening quite now in the pair. Let's see if we have an example somewhere. But the idea is that in this case, let's see if it was a bit diversion. Okay. Yes, like in this case, pairs continues rising, you can see it, while the red line continues moving downside, okay? We have a kind of a divergence there, okay? And of course, uh, yeah, but we have a bullish signal here. Not easy to read divergences around here. Yet there's another way to trade. I don't apply a lot, okay? Just mentioning. This indicator, okay, let's turn to 15-minute charts and see how it works when market is not in trend. Okay, see in this case the trend is strong. Okay, how it saturates in the base. Let's add a momentum indicator to filter a bit this noisy indicator we have here. Okay, too small. Okay, there we have. Okay, as you can see in this small time frame, indicator was saturating to the downside, and momentum was telling me there was no clear trend continuation. That saturation indicates a no trade together with this flat momentum indicator. We have to wait for situations like this, okay? And we have the first cut between both lines together, and when both lines cut the 25 to the upside, like happens here, and momentum is waning pace to the upside, there is where we must enter the market, okay? And stop loss, as always told you, under previous minimum of the last candles is a good place to place it, okay? So we can talk about a bit more if you don't have any questions about stochastic oscillators and how to use it and how to filter it. We can move a bit to another indicator, okay? There's so small time and a lot of things to talk about, okay? Okay, here we are again with our friend GBP. Perfect, go ahead. Okay, sorry. Well, we were talking about this indicator. We are going to talk, sorry, about this indicator that has been developed by John Bollinger. I guess he's still alive. In fact, he has visited South America a couple of years ago. I don't have the pleasure to meet him, but one of my colleagues did. And he developed this indicator that consists in a set of 3 lines or curves drawn in relation to price, okay? The middle band, the middle one, it's just the moving average, okay? I don't know, a simple moving average that could be simple or exponential as you like, but in this case, simple one of 20 periods, calculated on the close price that serves as the base of the upper and lower bands. The interval between the upper and the lower bands and the middle band is determined by volatility, typically in the standard deviation of the same data that we are used for the average, okay? This is a simple moving average with 2 deviation levels, okay? And the distance we can see between the middle line in the upper or the lower bands are determined by the volatility in the pair, okay? So how do we use this indicator? This indicator is helpful to place price inside a relative range to its past evolution, okay? And help us to determine the degree of volatility of the actual price. It's also giving us support and resistance dynamic levels, okay? The default setting is this 20 periods moving average and 2 standard deviations. We have found out that we could filter this information with a 60 days. But if we change the moving average number of periods, we have to change also the number of standard deviation. If we work with a media of around 50 periods, typical or good for long term, then the deviation should be of around 2.5. And we move to smaller time frames, like I don't know, maybe 10 periods moving average. Yes, the deviation should be of 1.5 periods. Okay, you can change deviations in the indicator and the length of the moving average. Okay, in here you change the periods and the deviation. Okay, smaller and quicker reactions will come if we plot 1 here and 1.5 here. Okay, let's see the difference. Okay, of course in the daily charts they are not so good. Okay, not good for GBP. It's in, if we try to change it to longer term charts, better 60. 1, I left 1, that's why it was not good. 1.5. Okay, let's try it again. Not good. Okay, it's not taking the 0.5 for me. Let's see if with a comma and not with a dot. No, it's not. Okay, let's leave it the classical setting. Back to the classical setting, that was great. Something the developer of the indicator plot these settings. Anyway, if price is above the media and close to the upper band, we said we are close to overbought in the pair as price is quite high. Under the media, okay, under the media line and close to the lower band, we say the pair is oversold and close to lower price. When bands get thinner, okay, let's put it a small smaller, okay, like in this case, that they get thinner and get close to each other, they are telling us that there is low volatility, and on the other hand, when they widen, we have high volatility, giving us important information. As you know, that Forex market is one of the most volatile markets we have. So usually after a period of stretching, when the bands are together, we can usually see important and quick movements that usually triggers price in the direction of the dominant trend in the periods measured. A price movement triggered in one band has its objective in the opposite band, giving a decent target for our trade. Not only in the opposite line, but also in the medium line, okay? Like in this case, if you can see the price action, like in here, the price reached the upper band, okay? And from here reached the other extreme of the band. Although, as long as price remains under the medium line and they begin to tend following trend, there's no chance I can trade from the downside to the other one, okay, in the opposite way, okay? I need to see this kind of flatness in the indicator to get ready for an upside continuation, a trend change, or maybe a trend continuation, okay? But when indicator has this strong downside inclination, I could not trade to the upside, okay? I should trade to the downside. See that inclination comes from from previous days, and once the pair reached the top of the band, it rebounds and gave us a good trade. Usually a conservative target would be trading to the medium band, okay, not just to the opposite as the author of this indicator suggests. I rather prefer to trade Bollinger Bands from the lower or the upper band to the medium line, okay, and not from one extreme to the other, okay, and never against dominant trend, okay. When bands begin to flatter, okay, like in this case, you can of course trade both sides, okay, but not common thing. Okay. Anyway, after we can see many extreme price movements that usually occur in the bands or close to them. When price passes, like in this case, out of the bands, we have symptoms of extreme strength or weakness, depending if price is above the upper band or under the lower one. In this case, it's weakness because we are under the lower one, okay? And the continuation of that movement is a probable scenario, okay? Using Bollinger Bands with another indicator help us to determine with high probabilities probable roofs or floors for the price action. I usually filtered Bollinger Bands with the relative strength index we have we talking before, okay? And another way to filter is work work with a momentum indicator that measures also the strength of the trend, okay? It's not a filter. Momentum measures trends, and this indicator measures over sold and over both conditions, okay? And relative strength index also measures over sold and over both conditions, okay? And I don't tend to plot two similar indicators in the same chart. Yet in this case, if you add a relative strength index and filter with it, okay, here we are, okay, you will find out that extremes, okay, approach to oversold over both levels, giving us a good filter or a good signal of a probable reversal, okay? Usually, I would say, like in this case, when the price moves outside the bands, it's telling me one way or the other trend is continuing strong down, okay? Like in this case, despite the intraday rebound to the upside we have because relative strength index was way too oversold, the indicator is telling me very strength is not exhausted. And as you can see, that happens around 155 and the pair in daily charts reach 135 or so. So one way or the other, the pair is telling me strength is good, okay? Of course, when GBP reaches 135, an historical low, and I don't know, 30 years minimum or so, I can take more bearish chances here. I would don't know you, but there's no other place to continue pushing down. Okay, we have to be quite conscious of this kind of things. See the difference? So we don't need to take just a look at indicator. As I was saying at the beginning of this webinar, there are other conditions we must consider before entering a trade, okay? Anyway, after reaching this historical minimum pair is always moving sideways and probably changing direction. Yet I believe the 150 zone, 151 will give a tough battle around here. Okay, so hi GBT, no problem. Good to have you here. Okay, we will have you better for the next session. This is about to end. So Ray, you asked what is the signification of third deviation. I don't understand what you call third deviation, Ray. If we come back here, okay. This is the moving average, and these are two deviations. Just if there is no third deviation in this indicator, okay? Oops, okay. We have a 20 periods moving average, okay? Apply to close, and the deviation is two from one side and two to the other side, okay? The deviation of this moving average to one side or to the other. Anyway, it's just an indicator with two deviations. The same is the deviation for two different sides of the of the indicator. My throw is taking me. Okay, so lower or upper band. It's the same. If one, okay, if one uses, sorry, I'm still not understanding where are you pointing. rate. Sorry. If one uses search, you mean if you add more deviations to the level? Of course, it's possible. Okay, you can add. Of course, yes. There we have. Okay, we have another systems that include more deviations. In fact, I have one. I choose as an indicator. I was not intending to present today, but well, if you want to see it, we can do it. Okay, give me a second till I close the chart. You will find a dark template for this one. I use it a lot, okay, with mostly with euro charts, okay. I know you hate black charts. Don't remind it to me, okay. Anyway, this is a very simple system, quite similar to Bollinger Bands, okay. This is a 20 periods moving average, exactly the same, but instead of two deviations typical from Bollinger, I add levels to that moving average. Okay, you can see them here. I hope you can see it. Okay, 34, 55. In fact, I don't know why I keep the 34. It's not very important one. Anyway, 34, 55, 89, and 200. Okay, you can see there 200. Okay, those are the levels, and the negative, the same numbers in negative levels to have the levels in both directions, upside and downside. Okay, less 34, minus 34. How do you say it in English? Minus or less? Minus 34, 4, minus 55, minus 89, and minus 200. Okay. Okay. That's just an indicator. I have the ADX, as you can see, as a filter, but the truth is that it's not quite necessary in here. Let's see if we can see the charts better. Okay, the idea is that when pair reach the third band, okay, would probably rebound in 15-minute charts. I use the same settings for GBP and for Japanese yen. Okay, you just have in here a case that prices approaches when it reaches today's low to the third band. The idea is that when it approaches to the third level, it will return to the medium line. Okay, that's the way to trade this level. Or if approaches to the third band, the idea is at least a comeback to the first one. Although, remember, this is a dynamic indicator, and you have to be quite quick to trade it, because it can happen. Let's see if we have an example of okay, here we are. So here we have a good example, a couple of examples. Okay, the price was falling harder. It reached the third band. Let's see if we can enlarge it without losing the point. Okay, here we are. Around here, okay? Around here, it reached the third band, okay? You can see it. Okay. It even fall harder, okay? And when I was here, when I get my entry point, okay, the 20 periods moving average was what? Like here. By the time the price reaches, the moving average moves to the downside. Okay, okay. Two big charts. Let's see if we can make it smaller or a bit. It's better. Okay. So as I was saying, this is a dynamic indicator, and it needs us to be fast of reaction, staying here, because when I get my entry signal, sorry, around here, okay, price manages to fall 30 more pips, okay, before rising, okay. Anyway, it reached the 20 moving average, okay, and price was what, 20 pips above my entry, around there, not that much, okay. So when we have these straight movements that reach this third band, we need to wait a bit and see what happens, okay. Price tends to continue before finding a certain bottom. You better filter this kind of indicator with moving average and deviations. I tend to filter it with static dynamic static supports or resistance levels I determine in forward charts. Okay, I try to find them and wait price to approach those zones before entering a trade. Okay, still too big. Okay, anyway, no problem. We have. I hope now it's better. or a bit better. Okay, let's see if we can find another case of the pair, like in this one, reaching the third band. Okay, and passing it a bit. When the pair reaches the third band and passes it a bit, it probably turns to the downside and give a trade. Okay, but of course we're talking about 15-minute charts. I'm changing the charts, but since it's not enough. Okay, sorry, because I didn't capture it again. Okay, now I capture it again. Sorry, Mo. I guess now it's okay. I forgot to recapture. Oh, sorry. Yeah, my apologies. Anyway, back to indicator. I was saying that when price action passes the third band a bit, usually returns and change trend, and the fourth band is there just in case. It's very hard to see price reach it, and I'm searching for an example. It happens a couple of times. Okay, I have seen it particularly in payrolls releases. Okay, yet anyway, this is the deviations I use for moving average. It's quite more or less the same that Bollinger Bands, okay, giving you a certain range to trade, okay. One other thing you should take care of is, as I would say inclination of the moving average, okay. The moving average make this kind of downside fall, okay. I will not dare to enter in against that strong trend for more than 10, 15, 20 pips, not more than that. It's too risky, okay. Yes, when the moving average change, we are looking at a different issue here. So back to your questions. Yes, Ahmed, the idea is to use it for short time entries. Okay. No, I don't use it in bigger charts. Let's see if we go to the end of what's happening today. Okay, let's see if price reaches only the second one. It's when markets moving sideways. Second band usually taints the price movements. Okay, third band and fourth band, you can see the pair touch those bands. Third and fourth, when we have those huge fundamental release, that makes the price jump more than usual. Okay, but when market is moving inside ranges, in range bound, sorry, second band, the zone between second and third one is a nice zone for rebound. Okay, getting against trend. Okay, it's like more or less like we were talking about Bollinger Bands. Okay, so we have 5 more minutes before ending this session. So if you have any questions, I guess this is the time to make it, because I won't start with a new indicator just for 5 minutes. Okay, so this is the time. And if you want to ask something about any of the indicators we have been looking at, please feel free to make the question. Okay. Okay, no questions. Okay, so you are too shy. So I guess that's it for now. We will be back in about an hour and a half or an hour or so, right? Let's ask the administration. Mike, for what are you asking? Which standard deviation used for Bollinger Bands? The default setting is 2, okay? In this case, I was showing you the setting. I will show you again. Here we are, 34, 55, 89, and 200. And the negative part then, less 34, less 55, less 89, and less 200. Okay? Can you see it? Those are the deviations for this last channel we have been talking about. Okay? Okay. See you later. Okay? Bollinger Bands. Do you host seminar in London? I wish to, Ray. I wish to visit London. It's one of my uncompleted dreams. Sorry, Ceviche. What do you mean about that? Okay, we could continue talking in the next session. I have enjoyed a lot, and I want to thank you all for being here today, and hope to see you soon again around a live webinar. I will leave you my emails